Let's move right on and focus in on the metals pack. I was just pointing out how the entire metal space is shining bright, but look what is going on with Tata Metaliks. That's one stock which is totally bucking the trend. It's about down by 4.5% almost as we speak. Let's bring on board the management to chat a bit about what's happening in the company, what transpired in the quarter gone by, and what's the future looking like. Let's bring on board Sandeep Kumar, the MD of Tata Metaliks. Good morning, Mr. Kumar. Thanks a lot for taking time out to chat with us. Just wanted to know, the strong double-digit top-line growth is something that you've been continued to clock in. Tell us what's leading to this, what has been the volume growth and the average realizations, because overall the numbers look fairly strong this time.
Good morning and thank you for the call. The top line has been steadily growing, and a 15% growth quarter on quarter in revenues has been achieved. As far as the EBITDA margins are concerned, well, the EBITDA margins have also increased in rupees per ton perspective, and there is a 10% growth in the EBITDA, total EBITDA, from about 60 crores to about 67 crores. So that's been the positive. As far as the growth, this growth has been led primarily by the pig iron, where there has been a 30% growth in sales volume, and the prices have moved up on account of the coal and coke moving up. It's been pushed by that, as well as by some smart, I would say, sales efforts by our team. I'm not really sure why the market has thought of it otherwise. In fact, we had problems in the first quarter in terms of production, and actually the sales volume could have been much more. But because of a limping blast furnace, we had actually had some restrictions in production. Otherwise, the numbers would have been still better. But purely from both a top line growth and EBITDA growth, it's 15% and 10% respectively. So there's no reason for the market to think otherwise.
You just said that the coal and coke prices went up last quarter. What is the outlook there? What are you expecting in the coming quarters in terms of costs? Are they likely to go up?
Well, the prices of coal and coke have already started moving down since the beginning of July, and they have fallen by almost about $25–30. But iron ore seems to be moving up a little, so the market on the raw material side is a bit confused. Pig iron, which follows the raw material, fell a little, but is again moving up a bit. So all in all, it's a little difficult to say which way the market would move, but certainly with monsoon season being there, the domestic steel market also normally tends to soften a bit. There is a bit of softening, at least in sentiment, but we have started seeing a bit of increase in prices of pig iron over the last, I would say, a couple of weeks.
And that you've also been looking to become a full-blown player in the ductile iron space of the business, but that's the part of the business that's been a drag on the profitability for a while, since the last few quarters. So what is the strategy there? How are you looking to grow within the business and grow the business?
Actually, the ductile iron pipe business has been doing quite well. If you look at quarter to quarter, we have last financial year, it steadily grew despite the problems of GST that we faced and the entire industry faced. And this quarter, we have actually done more than our plan. This is normally quarter one and quarter two are weak quarters, because traditionally the project money starts coming in, it starts getting approved, so it's a little slow. So if you look at it from quarter one of last year, it's more or less on par with quarter one of last year, but that's because GST was to be implemented, and therefore the project proponents rushed into completing dispatches. So that was an unusual quarter. Otherwise, if you look at it, we have actually done better. If you look at the EBITDA margins of the ductile iron pipe business, it's actually grown. It's actually moved up from about 21% to almost 23%. If you look at it, the complete, from the raw material to the ductile to the finished goods. If you calculate the EBITDA and not do the segmental EBITDA, then you will find that the EBITDA margins have actually grown. And that's the, I would say, the complete view on the business. What we do is we try to keep both the divisions at arm's length and have a transfer price, and therefore you see a bit of a squeeze in terms of the margins for ductile iron pipe. But as a company as a whole, our margins have actually grown.
What we're also understanding is that you're looking at inorganic growth opportunities, especially in the ductile business. Anything on that front that you'd like to share with us? What is the amount that you're looking to invest, and other details, if at all, any?
Well, I'm not in a position to comment at this point in time, but we are open to all options. As I have said in the past, we have evaluated, haven't found anything worthwhile till now, but we are on the constantly on the lookout, and if any interesting proposals come in, we are more than keen to kind of take that forward, and I can tell you at an appropriate time as and when something fructifies.
The amount of monies that you're looking to invest for this inorganic growth plan that you have, and also your current debt level, and considering that you're looking for these growth opportunities, how is it likely to change?
Well, the debt levels have been going down steadily. In fact, if you look at our debt to equity, it has come down to 1:1.3, and down from say 1.6 or 1.65 last quarter. EBITDA levels have been going up. The ROCE, which is the return on capital employed, is one of the best in the industry. So we don't have a problem of cash at the moment, and we have the free cash flows, which are very healthy for any growth opportunities that might arise. So as I have said in the past, we are looking at both organic and inorganic options, and we are proceeding on both at levels in which we have moved ahead quite a bit, but nothing has fructified in a sense that I'm not in a position to tell you anything till I have my board approvals, etc. But we are proceeding, and at an appropriate time I can talk about it in more detail. But just to answer your question on investments, any investments would be in the range of 500 to 1,000 crores, depending on whether it's an organic growth, a greenfield or a brownfield, or an acquisition. That's the range.
All right, Mr. Kumar, we'll let you go on that note. Thanks much for taking time out to talk to us about what the company is looking to as the way forward from here on.